How to present to raise capital for real estate deals. In this video, I'm gonna share a recording that we did in our private group called Apartment Investing Shark Pool. We have attorney Jillian Sidoti. She's gonna show you step by step how to create a rockstar investor pitch deck. You're gonna also see an example of her presenting her own deal. Now, if you don't know who I am, I'm Cornelius Cannon. I'm one of the leaders of the Apartment Investing Shark Pool. If you wanna know more about our community, click the link below and join our Shark Pool. Start the video.
Okay.
The rock star.
You ready to rock and roll?
Hey, are you able to tell a story about you being a rock star? Are you able to tell that story?
Oh, you want me to tell the story?
Please let everybody know that you are a true rock star. Please let everybody know, because people believe that the rock star can be an attorney. Please tell a story about how you.
Yeah. You know what? I will. I have a point in the presentation where I'll share a little bit about that part of my life. In the meantime, you know what? Let me drop something in the chat before I start going off. Hold on 1 second. Here, this is a little quiz that I created. It's for your own purposes. I go through some of the vital things that you need in your, what I call your rockstar money machine, to make sure that you can effectively raise capital and continuously do it. And so I created this little quiz to kind of, so you can self-evaluate where you are and maybe give you some things to think about. Take that whenever you want. Don't take it at all. I don't care. It's there to help you. So, there's no charge for it. It's free. So tonight, what we're going to focus on, and what that quiz kind of takes you through, is building a rockstar money machine. And I've identified that there are 7 pillars to a rockstar money machine. These are the pillars. Obviously, we don't have time to go through all of them. As a matter of fact, of the 7 pillars, there are 21 steps, and we're going to talk about just one of them. We're going to talk about perfecting your pitch and how to do a rocking investor presentation. So thank you all for coming out here tonight to check this out. I hope you find it valuable. I've had many people implement these strategies and go off to raise millions of dollars. So you guys are no different. You all can implement these strategies and go off and raise millions of dollars. And then I'm going to quickly run through 2 presentations that I've done myself that have yielded some decent results so far. And we're not done with them yet. So here is a chart that is called the most important graph in the world. And it's by a gentleman named Tony Buzan, who has since passed. This book is not super available anymore. It's really like, I saw it on what's it called, on Amazon one day, and it was like $125. So if you can't afford the book, don't worry. I'm going to give you the highlights here to try to help you figure out how to really do a presentation that sticks with the investor. So the first thing we're going to start about the chart, and I'm going to split back and forth here, is there's a couple of key parts in this chart, this P, this VR, and this R right here. And I'm going to start with those things, because what happens is investors remember a couple of things the most. First, the first thing they hear. That's the primacy effect. They remember the first thing they hear as one of the biggest things they hear in your presentation. So you want to make sure that you're starting off with something amazing. And when you start off with something like returns, or telling me about who your team is, you're not really giving me a great story. So you really want to think about, what is the first thing that these investors are hearing? And is it impressing them? Is it making them go like this, leaning in when you're presenting? Or is it making them start to look at their phone or pick at their nails? Make sure that the first thing they hear is something exciting. So if we look back at our chart, that's our P right over here. So what does this really mean? What is your first impression? Do you have an engaging presentation? Are you dressed well? Is your environment nice? Is the environment that you're in nice? Are you giving an online presentation? If so, have you thought about cleaning up your background or making sure that your microphone is working and that your technical aspects? The worst thing, is when you bored people to death because you're having technical difficulties. So get on early and make sure everything's running great. And finally, and most importantly, do you have a good story? Or are you starting off with the return? Because if you're starting off with the return, you're just not going to get people with that, especially nowadays. Now, I will say I saw there was one presentation on Shark Pool, and I don't remember the gentleman who gave the presentation, but he immediately shut down because he was in his car. He was giving his presentation from his car. He didn't have his camera on. So the sound wasn't very good. And we had to pull up our own presentation to look at what he was talking about. That kind of stuff, you're just not going to show the investor that you care about them by doing those kinds of things. So make sure that your first impression is really spot on. All right. So, because really at the end of the day, how many times have you heard from somebody, I flip properties and I'll give you a deed of trust or mortgage or earn 8% on your money. And it's like, honestly, guys, no one cares. If you can't give me a good story as to why you're different or what makes you special, then all of this stuff, how much you can earn, how much your investor can earn is irrelevant. Because I could say to you right now, earn 50% on your money. Well, it doesn't really matter if it's a scam. So start with your story. Sorry that this first bullet point here isn't coming out really good, but these are things you kind of want to start off with. Times are changing. We are bringing beautiful homes to the most deserving. We're providing housing where others are not, and where it's most needed. We're impacting communities. We see an influx of business, this type of business. Like, what is the story? And I'm going to show you examples. So if you're just not, grasping onto where do we start? Don't worry. I'm going to give you 2 examples. Okay, so going back to our most important graph in the world, we have this thing in the middle. And I'm going to tell you what this whole entire graph means. So don't worry. We have this VR, and this is the von Restorff effect. And the von Restorff effect, also known as the isolation effect, predicts that when multiple homogeneous stimuli are presented, the stimulus that differs from the rest is more likely to be remembered. The theory was coined by German psychiatrist and pediatrician Hedwig von Restorff, who in her 1933 study found that when participants were presented with a list of categorically similar items with one distinctive isolated item on the list, memory for the item was improved. So how can you have a von Restorff in yours? You want to say something impactful about the building that you're doing or something that differentiates you from your competition right in the middle of that presentation of yours. And I'm going to show you some examples, but here are some that we know in life in general. So we think of the greatest orators and their use of parable, the stories we know, and this is not meant to be religious. It's meant to prove a point, but the stories we remember the most from Jesus are the ones where he tells a parable, use of imagery, when we can build somebody into something and we can attack their senses so they understand, what something looks like, what something might smell like, what something sounds like. Those things will really envelop an investor into your story. So if you don't have great pictures on your presentation and you're just throwing up spreadsheets, you've lost one of those effects. You've lost one of those senses and you've lost part of your investor. Develop a signature story in the middle of your presentation. Is that story remarkable? Is it funny? Or is it interesting? Because if it isn't any of those things, then again, you're not going to entice that investor. So how can we apply this to business? First of all, I want you to know it doesn't have to be about the property. It can be about you, your why, your background, or your company. It can be about the community. It can be about the tenant, customer, or charitable bend, whatever it is. It doesn't have to pull at heartstrings either, guys. It just has to pull some kind of emotion. As a matter of fact, one of my favorite investments that I've ever done was a company named TerraCycle. If you guys want to look them up, TerraCycle. And they started their story off with, did you know that those big, huge laundry detergent bottles that you buy Tide in are not actually recyclable? You throw them in your recycling bin and they actually just go right into the garbage. They don't get recycled. They can't be recycled by a regular recycling facility. Well, this company, TerraCycle, has figured out how to recycle items. So you start off with how plastics are ruining the earth. They tell all these stories throughout, and then you come to the natural conclusion that this might be a good investment opportunity because we do have to figure out how to recycle this plastic that's otherwise not recyclable. And so as a consumer, as an environmentalist, as an investor, I can see not just the value in that for my community, but I can also see the value in it from a profitability standpoint. And that was a quick story, but that would be that. Can you, Brad, do you think you can not like promote yourself while I'm in the middle of presenting? That would be cool. So the next part of it is the next part we're going to be looking at, or the most important thing, is the recency effect. And that's the last thing that your investor here. So you want to end strong, tapping into what's significant, helping people envision their future. The audience should feel, look, say, do. And this is where you're going to put your call to action in. You can go to our website and sign up here. You can go to you can schedule a call with us. You want to make sure that they are having some kind of feeling, and then they take an action based on that feeling. So they're basically, if you don't give them a call to action, they're going to just walk away confused, or they're not going to act. Also, don't necessarily put the onus on you to follow up with them. You want to say, go to my investing platform, or let's schedule a call right now. Give them an opportunity to act. And also, you can also put this in what I call the rule of threes, where you give them 3 core ideas at the end. So if you want to help your community make money and join a winning team, call us today. See, so you go into threes, you give them the call to action. Then we had in the presentation, or in the graph, if you saw, there were these A's that were all popping up. Those are associations. And this is where we relate to the investor. So what do you need to know before you even write a presentation? What do you need to know in order to make a great presentation? You have to know who your investor avatar is. So if you don't spend time knowing who your investor avatar is beforehand, it's very difficult to make associations that speak to that particular avatar, that pull at their heartstrings, or make them laugh, or make them think, or make them pause, or make them invest, right? So this is where we make the associations, and then we come into the what's in it for them. Throughout the presentation, like a good comedian, and you don't have to be funny, but like a good comedian, you want to create recall throughout. And again, I'll give you an example. So you tell a story in the beginning. At the end, you come back to that story, you circle back, you close that loop. Personalize it, make it unexpected and special. Some entrepreneurs we know that make things unexpected and special are Richard Branson, for example. And if you guys want to find somebody who makes real estate unexpected and special, look up a gentleman by the name of Frank McKinney. He's a good friend of mine. And he writes some really great books on just living life in general, honestly. But he calls himself a philanthrocapitalist and a real estate artist. Amazing man. Check him out if you want to see things that are special and unexpected. And what I always like to talk about is like when rock stars go up on stage and they say things like, "We love you, Cleveland," and the crowd goes, "I know Cleveland, I live there," right? So that's what an association is. So you're really just kind of digging into what's important to your investors. Okay. Now, for me to master that graph, by the way, took me several years of studying the graph and implementing the graph. So what I'm going to do right now is make this even simpler for you. And I don't want to take complete credit for this. I learned this from a gentleman by the name of Michael Burnoff. Michael Burnoff is a neuro-linguistic programming specialist and hypnotherapist. I went to an event. It wasn't on capital raising at all. It was about giving a good presentation and just on how to talk to people in general. And I loved it. I loved every minute of it. I just absorbed it. And the thing he talked about doing first was you start with why. Why are you doing what you're doing? And it never has to do with the turn. The answer is never because we will make money. It is, why are we here? You build a story, you draw a picture, you tell people what it is that you're doing, why you're doing what you're doing. Then you're going to get into what. Why, what? So what are you going to do? We've identified that there's a real opportunity, and I'll pick on Dallas for a second, because if you guys come to the shark pools and you've ever seen me, do criticize or whatever. I'm always critical of Dallas, and rightfully and wrongfully so. But I'll sell you Dallas for a second. We'll turn the tables. Dallas is the fastest growing city in the United States. Dallas has had a 20% increase in its population over the last 10 years. And it's because of this, and this. So what we're going to do is we're going to provide for those people who are immigrating in from California and the Northeast and want the Texas cowboy way of life. And they want to live that life in Dallas, where there's an incredible job opportunities. So we have identified that the multifamily market in Dallas is second to none. And how we're going to do it is we have access to off-market deals where we're going to go in and make cash offers on these off-market deals, and we'll get ahead of the line and we'll get those properties cheaper than our competition, because we have this big fund that we've created that you can be a part of. All right. So do you see why are we going in here? What are we going to do? We're going to buy multifamily building. We're going to take advantage of it by buying multifamily buildings. And how we're going to do it is we're going to go in with cash and kill our competition. Okay. You're going to repeat that process 1 through 3 until you feel like you've completely told the story. All right. So then once you feel like I've told the story, I've exhausted my audience, this is where we start getting the investor. If you saw that chart, you probably noticed there's a little guy like sitting there, right? Towards the end. And that little guy that's where the investor starts feeling like, how can I be involved? Where can I fit into this? How can I, and you're going to reveal that to them. And that's when you talk about what if. So you implement your Von Restorff, you get major associations going, and then you hit them with the what if. So what if we could tell you could also take advantage of this incredible Dallas market and also participate in real estate investing without leaving the comfort of your home in Southern California? We're going to tell you exactly what we're going to do. We're going to offer you a preferred return of 8%. And then we're going to split it 50-50. But this means you get paid 8% on your money before we get paid. So what I'm going to tell you to do now is make an appointment with us, and we'll get you our offering documents. You can read through all of our offering documents, share them with your your financial advisor, share them with your attorney, your CPA. We want you to go through these offering documents carefully. We want to make sure that we have a good partnership here. And then we can set up a call to get you invested. So that's when you give them the what's in it for them. You give them the opportunity to take action, the end. So why, what, how, what if, what? Why, what, how, what if, what? Okay. So how long should your presentation be? 7 minutes. Seriously, that's it. Good luck. No, I'm just joking. That's how long the adult attention span. That's how long the adult attention span is. 7 minutes. So you got to keep them engaged, and then you got to kind of like reset and re-engage, reset, re-engage. So how long should it really be? And what I want you to do is copy TED Talks. TED Talks are 18 minutes long. It is 1 unit of optimal attention span. But if you don't believe me, maybe you can believe Oren Klav, who is the author of Pitch Anything. I've had him speak at some of my events before. He's an incredible presenter. And he will straight up tell you, it doesn't matter how much money you're looking for, whether it's, $500,000 or $500 million, you should not have a presentation that lasts more than 20 minutes. And the other thing I have to tell you is you must practice it. You must practice it. So you must try, do, get some feedback from people, record yourself, watch it, and then adjust accordingly. So why should you believe everything I just said? So I, for those of you who don't know me, my name is Jillian Sidoti. I was a practicing lawyer for about 15 years. Before I started practicing law, I actually was in the real estate industry, and I focused on raising capital. I'm in the real estate industry now. I'm invested in, you name it, I'm invested in everything except, I think, land. I don't think I have any land currently. But mobile home parks, self-storage facilities, multifamily properties, Airbnbs, hotels, I'm invested in it all. I love real estate, and I've loved it for a really long time. So when I was in law school, I desperately wanted to get into real estate. And so I started doing condo conversions down in San Diego back in 2005. Well, we all know what happened. Fast forward a little bit. We saw the writing on the wall. We got rid of all our properties. And by the time 2007 rolled around, we had no more properties, and I started practicing law. For the next 15 years until about 2020, I practiced securities law, where I helped people just like yourselves figure out how to raise capital from a legal perspective. And now I focus on the systems that you need to put into place, as well as the presentation in order to raise capital. Because the problem I saw when I was practicing law was people would come to me and, do the right thing by being legally compliant and putting everything together the right way. And then they would fail at raising capital. And it didn't make me feel good to take people's money for these legal documents they did indeed need, but to not have the systems and the presentation in place in order to raise capital effectively. So I now focus on building the systems out, because it's not just about the presentation. It's not just about the legal documents. You really have to have an entire system when it comes to raising capital. That's why there's 7 pillars and 21 steps. You cannot skip any of them, guys. So this is just one step in that process. And that's what I focus on now. When I was practicing law, I did Grant Cardone's funds. I did Tarek El Moussa's funds. A couple of other people you guys would know in the real estate space as well. And then I sold my law firm in 2020 to Nate Dodson and Richard Robinette down there in Dallas, ironically enough. And I've gone on and been doing this and just been focusing on investing and advising people on raising capital. All right. So I promised you guys 2 things. One, I told you this, I would tell you the story about, my previous rock career, which we will get to if we have time. But I also promised that I would show you examples of this. So these are 2 presentations that I've written, and I'm not going to actually give you the presentation. I'm going to walk through the presentation with you so you can see how I applied these concepts to this. So this is, let me back up for a second. This is Maryland Advisors. They are buying 3, and I'm telling you this out of order. I would not say it this way if I was giving the presentation, but I want to walk you through the presentation and show you how I applied the concepts. They're buying 3 student housing buildings in Tallahassee, Florida. The thing is about student housing, I have found, is that the general avatar for purchasing or investing does not completely and fully understand student housing. So where I started with this presentation is, why are we doing this? And I started with a why of student housing, because student housing has incredible opportunities, built-in demand, and the rent is by the bed. So overall, when you normally get, $1,200 for a unit, because we're charging by the bed, we would get $1,600 per unit. And every lease is guaranteed because every student has to have a guarantor for their lease with an income of at least 3 times the monthly rental rate. So you can read this on here. I'm not going to read you the whole thing, but it's recession proof because kids are still going to go to college even when the market goes down. The other thing is, what we've realized is that only 19% of Florida college students live on campus. So that means what? 81% of college students are living off campus. And if I was going to deliver this line, I'd kind of deliver it like in a funny way, and in case you can't do math like me, and I would say meaning 81% of students are looking for housing. And by the way, when you see something asterisk like this means that I do have I always source I try to source as many things as possible, I source everything, but I try to put the source right there on the slide so people can check my sources. Then I talk about, because, and what you might believe when you think about student housing is that these are our tenants, that these kids here are our tenants. But that's actually not true. Our real tenants are these guys, their parents, because they have to have their lease guaranteed by their parents. And their parents oftentimes are responsible for that rent. So this is why there's security in this, because you're not just renting to some 18-year-old kid who's going to destroy your property and you have no recourse. You're actually renting to their parents. And if they're not their parents, somebody who makes 3 times the monthly rent. So there you go. Then I'm going to start this. I'm paring it down. I start with this really big funnel of sorts in this presentation where I'm starting with this big broad category of why student housing. And then I'm going to bring it down. Okay. So now why this very specific area of Tallahassee? Well, Tallahassee is actually a great city. It has 38% job growth. It's top 10 best cities for job and wage growth by the Milken Institute, et cetera, et cetera. It has, and not just that, but let's really focus on the students, which is what our focus is. It has 3 large universities, but and I'm bringing it down even further. We're going to focus on Florida State. There's 36,000 students at Florida State. They have a 93% retention rate. And I'm going to get back to this. Then I go into, growth rate of ask for the rent I'm going to just skip through this real quick. And then I'm coming back around to that again. My big facts, there's a record-breaking freshman class this year. Huge. There were 7,200 first-year students, 9,700 graduate students, and 35% of the population in Tallahassee is students. That's crazy. I'm from Boston and I find that crazy. And not only now I'm bringing it down even further, right? I'm bringing it down even further. That funnel, not just 1 property, but 3 properties. Here are the 3 properties. They're all off market, total of 342 beds. And we're going to bring it together. We're going to manage this all together. There's hasn't been any upgrades or improvements since the build. So there's a lot of potential upside. Our first building is the flats. Now I'm getting into the visual aspect of it. They have, here's what it looks like now. As you can see, there's a lot of room for improvement and our rent comparables are here. We're way down compared to what other similarly situated properties in the area. So there's a lot of room. I mean, do you see how visual this is? I'm not just telling you, I'm not just throwing up a slide that has a lot of numbers on it that, you know, you have to squint to read. And I don't know about you guys, but ever since I got in my 40s, everything's squint, right? We don't want to make our people squint. We don't want to make them do heavy math. We want to make it really easy for them, right? So here we're making it really easy. We have this great property. It looks pretty nice. There is room for improvement, and there's definitely upward mobility with the rents. Same with this one. Looks really nice. It's $400 per bed. It's 23% below renovated market, below the renovated market rate. And here's what it looks like right now. As you can see, we can make a lot of improvements here, and we are still below market rents in this one as well. Next, we have the pavilion, which allows us to, it's 37% below renovated market. Again, pictures, and now I'm getting like our investor kind of used to this, and they are really below rent, right? So I'm making that real impact at the end here. So what's our plan? This is our plan. We're gonna bring it up to market rents, and we're estimating about a 25% average rehab, a 25% return on investment. We're going to make incremental, inexpensive improvements that are going to make a huge impact on our rent. And how we're going to do that is we're going to upgrade the kitchens. And then also kids like to hang out, college kids like to hang out, and we're going to improve those common areas so they have, when they pull up, they have nice places to hang out. They enjoy living there. They like living there. But wait, there's more. Not only that, we're going to enlist the services of one of the best management companies in the country. It's the #1 student housing management company. We don't want to go this alone. We look to have a great team around us, and this company is second to none. They have modern collection practices. They focus on safety, modern marketing, security guarantees. We do not have to reinvent the wheel. They've already invented the perfect wheel, and we're just going to hook it up to our vehicle. And now I'm going to get into what it's in it for them. And don't find this all that shocking. But look, I barely have anything on this slide. I do not have a lot of information on the slide because this is not your opportunity to drill down on numbers. When they get your legal documents, that is when they're going to be able to drill down on the numbers, not here. Tell them what they want to know now. You've brought them through this wonderful experience of getting them to believe that they could be part of this wonderful opportunity. Why would you kill them with a blinding spreadsheet? Don't. Just give them the highlights. Give them what's really important to them. We're going to do a preferred return paid quarterly, and we project a 16.2% IRR on a 5-year hold period. That's what they need to know right now. They can sit down and do all those really big, important numbers when they get the PPM and the operating agreement and your financials from you to go over with their CPA or their RIA or whoever they have or their attorney. They don't need to go through that right now. This is a 17-minute presentation where you're making them feel good about the possibility of investing. Now that I've shown them the opportunity, here's where I can start talking about the team and say, and proving my point, like backing up everything I said with a killer team. Then I'm going to give my call to action. What I want you guys to do when you're done today is I want you to email me, blah, 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 or you can go to our website and invest right there. Thank you so much for joining us. Questions? All right. I'm going to show you one more. It's a little shorter. This one is for a fund for Phoenix. This is, oh, shoot, there's changes I made to this one. Sorry, guys. This isn't exactly This is an older version, but it'll still work. All right. But I'm doing a very similar model where I'm starting off with, I'm talking about the explosive growth of Phoenix. Again, I'm bringing you in. This is kind of similar to my Dallas example. You know, this Phoenix has had just incredible growth. You can read what's here on, but I mean, they've been killing the game. And why they've been killing the game? Because their government allows them to do so. The government has put the Greater Phoenix Economic Council has put things into place that have made it so easy for businesses to move in, and they have. $1.8 billion in capital has been invested, and it's created 8,700 jobs. And what we realize is that a lot of those jobs are in tech, and every 100 tech jobs that are created, actually another 357 jobs are created. So it's not just about the tech, because when you bring in that many people who are in tech, they also need restaurants, shopping, facilities, hospitals. You know, they need all of these things. So there's jobs for everyone. It's not just about the tech. And not to mention, it's not just tech companies that have moved in. All of these other companies, health companies, packaging, autonomous vehicles, financial services, all have moved in. Nationwide, you guys know Nationwide, it's an insurance company. So what is ended up happening because of all of this amazing stuff moving in and tech companies and stuff is historically low vacancy rates, right? And guys, I don't know about you, but I have seen units in Phoenix go for as much as $425,000 per unit. $425,000 per unit. It's incredible, right? The average there is $202,000 per unit. So most entrepreneurs or most developers or real estate investors are buying their units for around $202,000 per unit, with the assumption that there's value add opportunity there. There's going to need to be some improvements made. You know, rents are going to have to be moved up. But what we have and why we are different is because we're going to do ground up construction. We've already secured the land. We have 3 projects underway. And our average price per unit is $157,000 per unit, almost $50,000 less per unit on average, brand new. Don't you think people would rather live in a brand new construction? And it's costing us less to bring that brand new construction to market than to go out, buy old, and rehab. It's incredible. I mean, this cost savings is incredible, and we have that opportunity. But I also want to talk now, this particular group, Certainty, they are really concerned about some other things. And the other things that they're concerned about are they want to make sure that their tenants have a safe, beautiful place to live that's environmentally conscious, that takes tenant safety and comfort into consideration, and is energy and efficient, especially in hot Arizona. And every building that they do takes into consideration the surrounding area, the surrounding vegetation and atmosphere. And so what we like to do is have bright colors in a lot of our buildings to complement the surrounding area. Now, this is an association that I've put in here. This is Art Scott. He's, the proprietor. And I just love this picture with his dog, because if you guys look, I bet you money, you real estate entrepreneurs, that your audience are mostly dog lovers. And this slide will speak to them in a silent way. And by the way, I'm not saying put dogs in your presentation. The reason why I know this is because when I was at the firm, my marketing person, Lauren, who still works with me, she actually did a study on our clientele and found out 2 major things about our clients. They liked, the number 2 thing that our clients liked was luxury travel. The number 1 thing they liked was dogs. So we started putting dogs and stuff. and it spoke to people. So that's why it's so important to know who your avatar is, so you can make those associations and relate to them and have them feeling like they know you and know your business and would like to be involved in your business. Okay. So again, I had mentioned in the previous slide that this company is very concerned about making sure that their tenants are happy, safe, living in a nice place that is environmentally conscious. And they take that a step further by going to for their future builds, looking at modular homes, and they've partnered with this company, S2A Modular, that has a sustainable bend to it, and it's actually has 50% less waste compared to stick built. And not only that, it's going to save us even more money than the $157,000 per unit. We're going to even spend less. This company has a mega factory where they can prefab all of our buildings. It's going to be spectacular. We can't wait to start implementing this in some of our builds. So how do we get out of all this? Well, there's actually two different opportunities in here. We have, we're going to purchase and develop, obviously, and then we're going to lease up. But that's not necessarily where it ends. It can end for you at that point. If you just want to get into the purchase and development and then get out, by all means, do it. We are not looking to hold your money hostage. But if you want to stay in and realize the cash flow from the building, then what you can do is you can participate in our related fund, because what we're going to do is we're going to take these buildings that we build, get them appraised, and then sell them to a related fund so that they're cash flowing for the related fund. But those investors who want to get out and take their money off the table can do so at that time. So you can benefit from both sides of the transaction. You can then reinvest your money into our second fund, our management team. And then you talk about the management team. I'm on here. And then again, real simple slide that talks about what is in it for the investors. We highlight that profit distribution because that's really what's important to them. The next steps for you, this is our call to action. Request our investment package. This is how you would do it. We would talk through that. And finally, thank you. When it comes to investing, it's best to be certain. All righty. Who has questions?
All right, hold on. Let me unmute everybody. Oh man, that was murder. Hold on, let's see here.
Sorry, I know I talk fast.
No problem. Let's see. Unmute yourself. Go ahead. Shucks. Hold on.
I'm going to paste this quiz in here again, guys, because I know I pasted earlier, but some of you might have come in.
All right, make sure. Hold on. Here we go. All right, you should be able to unmute yourself. You got a question? Anyone got a question?
I have questions.
Yeah, CB. Hello, CB.
Hi. So, Jillian, thank you for the great presentation. I really enjoyed it. I wonder, what software do you use to create these presentations?
I start with a template. I just go and find something that I feel like will work. So, and then it's all PowerPoint, and then I customize each one for each client. So yeah, that's
great. So one of your business is create the deck for clients.
Yeah. So I will tell you guys right now, so you don't all call me to do your deck for you. I do not do decks independent of taking you, because again, like I started with when I was telling you about myself. The problem I find with a lot of entrepreneurs is that they're like, I'm going to do a great deck, or I'm going to do great legal work. And then they forget about all the stuff in the middle. You have to think about the whole thing. So if I'm going to create a deck for you, we're going to have a bigger relationship than me just creating the deck for you.
Okay. I have great projects.
Okay.
Yes.
That's awesome. That's awesome.
Mm-hmm.
Who else?
You got a question, Vish?
Yeah, okay, Jillian, can you hear me now?
I can.
All right, thank you for your wonderful presentation. I really enjoyed every bit of it. And basically, you told us the psychology of every investor and what to present, how to keep their attention lively.
Yeah.
Not just talk only about the investment. You told you break the ice, add some humor, make it personable, everything by showing dogs. And because there might be a lot of audience who like dogs also in the process, they might connect with you. So there is another acronym what I use all the time when it comes to capital raising It's called Ford. Ford as an automobile, Ford. Have you heard about that?
No, what is it?
Okay, Ford. I'll put it in the chat.
Okay, hold on. Let me go check.
And let me put it right here. Okay. It's 1 second. It's okay. I'm going to break it down into what exactly it is going to be for. So F is for family. Okay. And O is for occupation. And R is for recreation. And D is for dreams. So using this, you will be able to talk to anybody anywhere in the world, because everybody talks about family. If they don't have a family, they'll have an occupation, what kind of work they do, or recreation, any sports. So dreams, everybody has a dream. So, I mean, this is what I use at any given point in time, and everyone likes talking about family. If they don't want to talk about family, there's so many other things. So that is another thing what I use it. But
thank you. No, that's very helpful. Yeah.
Right,
you know, it's really important to have, like, that's why, again, step number, I don't remember my own steps, but step number 4 or 5, or one of my steps is knowing who your investor is, your investor avatar. It's so important. So yeah, you want to know what their family, occupation, recreation, and dreams all are, so that you can speak to those things when you're talking to them. Like, one of the things I often talk about when I'm giving presentations, because it's really important to me, and I know deep down it's important to my investors, they might just not know it yet, is generational wealth building. And talking about Maslow's hierarchy of needs, and how Maslow's hierarchy of needs is really important to pay attention to for your children and for yourself, and for generational wealth building. And you can hit pretty much all of those things, that whole Ford, by looking at Maslow's hierarchy of needs. I just kind of went on a tangent there, but it's one of those things that I think is really important for us all to understand.
Yeah, good stuff. I think Mark, you have a question, Mark? Is your hand raised?
Thanks, Vish.
Yeah.
Thank you, Vish. Thank you, CB, for your questions. Thank you all. Go ahead, Mark.
All right, great. So first of all, I cannot explain how good this is, how much information it is. Jillian, you are very tough on the shark pool. So it's good to see you in a much nicer, more.
I know, I'm not that. I know. I complain to Cornelius every week on how I'm mean.
Yeah. So, I kind of just took it, everything I said. I'm going to use this time right here to really just take some notes and jot things down. But what you're doing right now is really just like speaking to me as a capital raiser. I'm in Dallas. So hearing you, talk about that, I'm just noticing that it's a lot of like a mixed culture going on right now. They have the standalone multifamily properties, but they also are moving they're making room for a lot of ground up development. And I'm seeing from what you're explaining about what was going on in Phoenix, that's exactly what's happening right here, right? It's not room, so they're making way. When I'm starting this, the question that I have for you is, making this presentation, like, what would be your first, like the process of the presentation? Is that what I would start with, as far as like what's going on in Dallas right now, as far as like the future? Because there are a lot of people who think like you do, contrary to popular belief, who thinks the Cowboys are great and God just down on them and everything we say goes. Contrary to popular belief, a lot of people think about Dallas, DFW, Fort Worth, DFW the same exact way. So in order to change that narrative, when you're trying to bring a presentation, what would be that process? Should I, how would you start that off?
Mar, where are you investing? Like, where in Dallas are you investing?
I'm going to, I'm looking at properties right now. A lot of properties are opening up in the southern sector for from ground up development. It's either far south or far north,
Okay.
So
Let's talk about that far south area, right? Lots of gentrification going on. Maybe not gentrification so much, but build up. It wasn't that great of an area of town. Is that
yes?
Yeah. Okay, this is the story I would tell for that particular. I don't know anything. I don't know about the North as much. I do know about the South. I worked with the gentleman down there. You've got to develop the story that you want to tell on why you're going into that part of town. And I think I know why, but you need to tell that story.
Okay.
So I want you to literally write down all the reasons as to why you want to be in that very specific area of Dallas. Because that's a good, to me, just hearing what you're saying, like where you're going, to me, that's a good story. To me, that's been a neglected area of town where people are making money. They are pulling themselves up by the bootstraps. There is some kind of revitalization going down there. There are city programs that are taking care of that area. But if you don't have the right team in that part of town, you will fail. We're the right team, and here's why. And that's what you want. And I would talk about why you want to be in that part of town, and then talk about why you're the right man for the job.
That's awesome. Thank you very much, Jillian.
Yeah, absolutely.
Thank you.
There's a question here in the chat from Courtney. Do you recommend having only one speaker do the presentation? Is it distracting to have more than one? No, not necessarily. It depends. I always love doing Shark. I'll give you a perfect example. I always love doing Shark Pool when Charlie's here, because Charlie and I have presented together a bunch of times. So, he and I have kind of had like an agreement that we'll always do Shark Pool together. It just depends on your chemistry, your practice, how good of speakers you both are. And from when I work with Charlie, like I enjoy having that bouncing off of, jokes or what have you. And I have some other partners like that as well that I work with on a regular basis, that I like it when they're there and they can add value to the conversation. So as long as you're both adding value to the conversation and you feel confident and you speak confidently, I think having a team approach isn't necessarily a bad idea. You just want to make sure that you speak with the same level of confidence and you have the same presentation style. So practice. That was one of my things, is that you got to practice the stuff. You don't just come out of the gate doing great presentations.
Thank you. CB, you got your hand up? I got a question.
Yes, Jillian, I wonder if you can go back to the chart from the beginning, that graphic.
Yeah. Hold on one second.
Can you, because I feel I didn't grab the full picture. I wonder if you can.
Yeah, absolutely.
Yeah, I don't think the Rockstar store was told either.
Oh no, I didn't. Okay, so I'll tell you guys that story. All right, so okay, so I it's always better when I tell the story if my husband's here. I should just go grab him. But when I was in college, I was a musician, or when I was, from I was a kid all the way through college, I was a musician. And I played in a rock band. I was the bass player in a rock band. And my husband was the booking agent at a rock club, and he booked my band, and then he kept booking my band. And I was like, wow, we're finally making it. And like, my drummer's like, no, this guy just likes you. Dummy. And I was like, no. So anyhow, as it turns out, my husband that was just his day job, was being this booking agent. It turned out that he was actually in this really, we lived in Boston at the time. He was in this really popular band that was popular in Boston. And he's an amazing guitarist. He pretty much made me want to quit playing because he's just so good. Anyhow, fast forward, I was in law school. I ended up dropping out of law school and starting a record label and going on tour for about 2 years. But one of the things I did was I did not finance my business properly. I financed the entire thing on my credit card. And I ended up buying an RV off of eBay for like $1,500. And that RV from eBay did exactly what an RV for $1,500 off eBay should do, which was broke down every 20 minutes. And so we were stuck in either the middle of the United States or the middle of the Canada more times than I can count. And my final, straw that broke the camel's back was we were on tour and we ended up in a place called Memphis, Nebraska, a land of 100 people and 2 teeth. And I can tell that joke because none of you are from Memphis, Nebraska. So none of you are going to be insulted by it. Anyhow, nonetheless, I ended up sitting down on the steps of the RV overlooking this park one day and, stuck, just devastated, just feeling like all my hopes and dreams were being dashed, and looked out and thought, there's got to be a better way. This cannot be the way businesses run. This is not what entrepreneurs do. And it was at that point I decided to go back to law school. And then I decided to get into real estate. And that's how I started realizing that, you cannot run a business on faith alone. You need capital. And that's how I started getting into this world of capital raising and realizing how important it is to get capital to make more capital, period. That's what you need to do. So, that's my rock and roll story. My husband still plays. He's been a stay-at-home dad for the last 15 years. So, not as much as he probably would like, but, that's my rock and roll story. And we did a lot of big things. We went on tour to South Africa, and he opened for the Foo Fighters, and he opened for Sum 41, and he opened for all these big bands, but yeah.
I think so this is I guess CB got question, then Carrie, then Alice, then I got Denise.
I already asked my question. It's about the chat.
Denise, do you mind press the icon so I put you on the lineup of the raise hand icon?
Yeah, I can do that.
All right, thank you. Go ahead, Jillian. And
there's one in
I think CB got a question for you, right?
Oh, go ahead, CB, go.
Oh, please don't forget about the chat, because you started with the chat, but
yes, I'm so sorry. That's right. Okay, all right. I got distracted.
I love your story. But I still want to learn about
let's
the
go
chat.
back here. Let's take a look. Thanks. All right, here we go. All right. So I don't want you to get distracted by everything that's on here. I just really want you to focus on primacy, making associations throughout, like validating the feelings of your investors, making them feel something, speaking to them, because, and you'll notice how I kind of did that. Let's talk about Maryland advisors for a second. It's like, the first thing you hear about student housing is you think about college students ruining your building. So we stop that in the tracks and say, look, and we give them a real visual. These are not your tenants. Your tenants are really these people, the ones with the money. So we have our primacy effect. We have our associations. These are the things you really want to worry about. Your associations, your Van Rosteroff, what's in it for them? How can your investors see themselves into the story, continuing with associations, and then giving them the recency effect, tapping into what's significant. Help people envision their future. Tell them what to do next. Give them a call to action.
What about the bottom? What's the little tree or arrow?
These are eyes, and these are inferences, and how you can relate an inference to an association. And then this is an outlier, but don't literally just focus on this for me.
Okay.
I've already made it more complicated than it needs to be. And at the end of the day, the why, what, how, what if, what, why, what, how is, why, what, how, what if, what is an easier way to implement all of this right here. You will learn this eventually. Start with the why, what, how. That makes it so much easier for you. Oh, you guys are so nice in the chat. I'm just seeing them all right now. That's great.
Outstanding. I guess, Carrie, you got a question, Carrie?
Yeah, Mar, I'm just going to tell you right now, our band was not that good. So yes.
Carrie, you there?
Yes, I'm here. I'm here. Can you guys hear me?
Yeah, I can hear you. You stay there, Carrie? Are you done? And come back to you? All right, 5, 4. All right, come back. Go ahead, Alex. You up, Alex? Oh, wait. Carrie, you
Yes,
there?
yes, I'm here. Yes, I'm here. Can you hear me?
Yeah.
Yes, yes. Okay, awesome. I just want to say that, thank you, Jillian, so much for your great presentation. I really love and learn a lot from that. My question is that, after all the short poll presentation, I always look on Facebook to see how investor the feedback. And one of the feedback, they said that they would one of the investors said that they would love to see all the risk that they can have through a to a deal. So what do you think about that? Do you think that we should put that on into our presentation? Even though
no, because look, they're gonna get the risks when they get the private placement memorandum. Should you put a disclaimer at the beginning that says, this is not legal advice. You need to read all of our documents before going forward, that kind of stuff. I do that all the time. I took that out of here for tonight's purposes, just to get, straight to the point. So should you put a disclaimer? Sure. Should you let them know that there are risks? Absolutely. But do you start enumerating all the risks? No, this is your time to shine, not your time to make everybody depressed. That doesn't mean we pretend that the risks don't exist. That doesn't mean we lie. That doesn't mean we act reasonable and give reasonable timelines. We always stick to the truth, especially in this area. We don't sugarcoat things, but at the same time, you're not going to it's kind of like going on a first date. You don't tell the person you're on that first date with all your faults. Sometimes I snore at night if, you don't start the date with that. Right. And that's kind of here. But I will tell you this, one of my best fundraisers ever was a guy out of Colorado, and he would straight up say, I'm only going to pay you 6% on this deal. And they'd say, oh my God, that's not a lot. And he would say, well, that's what I'm comfortable paying. That's what the deal's comfortable paying. And if you can't handle that, then perhaps this is too risky for you. And it worked like a charm every time, because it was like him playing hard to get, like you're on a date. Right. So remember that this is your first date when you're doing these. It might not be the first time you're meeting somebody, but it is your first date. It's your first impression. So telling them all the problems that exist on the first date doesn't make sense. Do you need to tell them all the problems? Absolutely. That's why you have ironclad legal documents. This is one step in 21 steps. I hope that helps.
Gotcha. Yes, very powerful. Thank you so much.
Absolutely.
Outstanding. Thank you so much, Carrie. Alex, you up? Alex, you ready?
Yes. Hi. Great presentation. I learned a lot from you. My question is, how would you change the presentation since I'm not the main operator? My partner and I, we work with large operators with several billions of dollars under asset management. So what we do is we sort of create an opening, tell a little bit about the firm that we selected this operator based on the track record, market condition. We've done due diligence, we love the asset, we've done several deals with them, this and that, but I'm not obviously the main speaker, right? So I'm just using sort of an opening and then a closing, where after the presentation, I tell them, what are the next steps and things of that nature.
Yeah, no, that's a great question. So do you know Jeremy Roll?
Yes, yes, I do. Yes, I do.
Yeah, I would watch him. I mean, he's not an operator. I've invested with him before, and he he knows his stuff. He knows things. I trust him to make good decisions for me. And that's kind of the story you want to tell, right? Like, I've realized that the better opportunity is finding operators who already exist in their marketplace. And therefore I've done all the research, and this is my process. I mean, take them through the process, the day in the life of Alex, right? Of how Alex goes through a deal, and then why you find this deal like to be a good deal, and how they can get into, using your brain. What if you could do this with me? I'm going to give you a way you can do it without having to do that countless hours of research that I've had to do and the countless due diligence I've had to do. I'm going to do it for you. And what if you could be part of that? And what if you could just invest right alongside me? Call to action. There you go. I mean, to me, that's a home run, Alex. You're out there all the time. I see you out there all the time doing things, and you're a really bright guy. You should have no problem raising capital.
No, I mean, we're done quite well. We raised over 20
No, I know. My point being is that
I do quite well.
I want to affect, make it even more effective, right? So I'm always looking.
Yeah, no, and I think that's what you do. Almost, Alex. What I would do, or anybody in Alex's position, is exhaust people to death with the process that you go through. Because, ladies and gentlemen, this man's at every single educational event. It wears me out, right? So to me, like, I would say, like, I do the work where you don't have to. I spend my evenings sitting on these webinars, listening to these crazy ladies talk about investor presentations, So that's the story I would tell, and just exhaust people and tell people how they could do it themselves. And then the natural conclusion is, I can't do this myself. Alex has already done all this work. Why would I bother? I'd just go with him. And I had a client in Southern California during the last downturn, which was, a long time ago, obviously now at this point. But during the last downturn, their thing was they would do presentations on how to take advantage of the foreclosure market in California, right? And they would give a full-blown presentation on exactly how to get into the foreclosure market, step by step. First you got to go to this newspaper, read this thing, then go to these courtroom steps, bring a cashier's check for $300,000. Then you got to get into the property, and then you got to do this. And here's examples of what we've done. Completely overwhelm the audience, to the point where the audience is just like, well, why can't I just invest with you? Yeah, exactly. So that's the approach I would take, Alex.
Okay, great. Thank you. I appreciate it.
Outstanding. That's great stuff. Or go the cheap plug, go apartment sharp pool. Denise, you ready?
I am. Gillian, I just want to say thank you for performing. You're a speaker, but you're a rock and roller. So what do I really expect, right? It's crazy. It's cool. So my question is, I know you mentioned not to put returns on these presentations and instead keep them on the PPM. Have you noticed that there are more potential investors by capturing them in and contacting you than putting it on there?
Yeah, I want to correct that for a second, because I'm not saying not to put the returns. I'm saying don't start with them, right? And then don't put like these big, huge, like hard to read. I don't want to do mental gymnastics while I'm watching your presentation. And if you show let me tell you what happens in an investor's mind. If you show them a spreadsheet on your presentation, they immediately believe that that's important, right? And it might very well be important. I'm not discounting its importance. What I'm discounting is you've also given them a job to do, because as a good, diligent investor, now they better examine that spreadsheet. Right? You've just given them a job. Whereas you can give them that information so that they can go over it in their own time if they so choose. But to do that there and pressure them and then muddle their mind, you want to have them feeling really distinct feelings: euphoria, hopefulness. They can laugh, they find something funny, they can be angry at a situation and they want to be part of the change. Whatever it is, they can feel all of those feelings. We want them to feel feelings. We want them to invest in motion. What we don't want them is confused. And if you put a big spreadsheet on there and then make them figure it all out, you're going to confuse them.
So I do have a follow-up. Would you say for Shark Pool purposes, because eventually I would love to get on there and have you be mean to me. Would you?
Am I really that mean? I try to sandwich it.
I don't think so. I think you're phenomenal, and you give me a good laugh every single time. But would you say for Shark Pool purposes include it, right?
So yeah, no. I'm still saying I wouldn't even say in Shark Pool. I would do exactly what I showed you here. Tell people what's in it for them. And then if they're interested in investing, like the thing is, and this is the problem that we've gotten into with Shark Pool, is we've started analyzing deals on Shark Pool. If you guys watch Shark Tank, which was what we're trying to emulate, they come in, they give them the quick information, and those sharks don't, they either see the opportunity or they don't in less than 10 minutes. Yeah. And we're spending 25, 30 minutes on one multifamily deal. And everybody in the room understands what multifamily is. You don't even need to explain it, right? So this is where I have a problem with like trying to really drill down on these deals. Now, there's plenty of information that have been given in some of these presentations where, George, Charlie, Peggy, and I, and Irish Kevin, we've all looked at those deals and can point out one little piece of information and go, wait, that's a problem. You don't need to give us 1,000 pieces of information for us to extract and understand. And, like the one day somebody said that the growth in Houston had been 20% in the last year. Like, come on, like it's not even physically possible. Where did all those people come from? Right. So stuff like that. Just stick to the points that are true, are real, you can prove and help prove your point without, I cannot emphasize this enough, guys. Do not ever tell even a little lie. Do not exaggerate a little bit. Do not do any of these things that can put you in a situation where you could be deemed as not truthful. You always stick to the truth in this situation. I mean, that's good life policy, right? But especially here, because we don't just have people in their hard-earned money that they're parting with and they're trusting you with. We also have like several regulatory agencies that will hunt you down and hurt you. You don't want to be involved in that. You just don't. All right. Thanks, Denise. I appreciate it.
Thank you. Tom, you up? Tom, you ready, Tom?
Yeah. Can you hear me?
Yeah, we can hear you, Tom.
Yeah.
Yeah. I'm speaking from. I really enjoy your program. Jillian is going international. I'm speaking from Ghana, West Africa.
Yeah.
Yeah, I'm excited. I'm excited to be part of this program.
Hold on, I'm going to put my headphones on because I'm having a little bit of a hard time hearing you. Go ahead.
Yeah. I have incorporated a company in Delaware, and I want to start with the family. So I'm happy to be part of your group. I'm excited.
Okay.
All right.
I'm so sorry, Tom. You're breaking up every other word. I don't know.
I think you're saying that he's excited to be part of your group and giving you feedback.
Thank you. I just heard Delaware.
Yeah, I guess he got a company in Delaware, right?
Oh, very good.
Yeah, so I'm speaking from Ghana.
But right now here in Paradise in Ghana, in Paradise right now.
Yeah. Thank you. Nice talking
Good
to
deal,
you.
man. Thank you, man. Thank you. All right, Francis.
Hey, I'm from Memphis Nebraska, Jillian.
No, you're not. You are so not.
In speech therapy, so I lost my Nebraska accent, and I'm just
Okay, but you're not from Memphis. There ain't no way.
I just thought I'd throw that at you. Nobody better be here from Nebraska, from Memphis.
I'm so insulted. No, you're not. You still don't have internet if you're from Memphis.
That's true. No, I moved to Texas. How's that? So, anyways, you know that one slide you had that had the numbers, like what the return is, IR. I was just looking at that slide, and I'm thinking, for somebody who's one of those numbers people, logical people, they're gonna go. That's probably the most important slide for them to be coming in to listen to, the presentation. And I saw that wasn't really emphasized. I mean, I could barely read the font. The font was off. Was that intentionally done so that way you can, because you kind of want to grab them before they go, if I can't even, figure out what the site is, and then the rest of the presentation was everything else but that they're looking for. Is that something that's deliberately done?
No, not necessarily. So if you'll notice, we do talk earlier at when there's a slide in the middle of it called the plan, where we talk about our overall return. We're expecting a 25% overall return, right? And then in our investor expectations, we have 4 things. We have what you're and by the way, you got to remember, this isn't like in a vacuum where they're just reading slides. You're talking to them. So this is your opportunity to emphasize those things that you want to emphasize and give them the opportunity to ask the questions that they want to ask, right? So, and another thing is we also want to give although I made the comment of not making our investors do mental gymnastics. We don't want them to do mental gymnastics, but we also want to make them feel really smart. We want them to draw their own conclusions. And by leaving out some information, but giving them key pieces so they can solve the puzzle easily themselves, then we've given them the tools to draw those conclusions. And you can talk. No, I want you to talk about returns. I want you to talk about how you've come to those conclusions for sure. I'm not saying that. I also want you to give them the stimulation of figuring out, right? Like, and I'll give you guys a perfect example. If you guys ever see one of those ridiculous math questions on Facebook, like how many triangles are in this picture, or, if sock plus book plus pencil equals 5 and pencil plus sock, if you see any of those, we all stop to see if we can figure it out and then feel like geniuses when we do. That's what we want to be doing for our investors. Not too hard, not too much.
Yeah, that's awesome. Yeah, thank you so much. I mean, this is great. Yeah, I'll go back to Nebraska and tell my folks.
That's awesome. That's awesome.
Thank you, Francis.
You're welcome.
Stephen, you're up. How are you?
Oh, you got to unmute.
You're muted.
How's that? Is that better?
That's better.
Wonderful. Amazing presentation, Jillian. Being from Massachusetts myself, I just had to ask, what is your favorite Pink Floyd album?
Dark Side of the Moon. But you know what? The funny thing is I'm probably not as big of a Pink Floyd fan as I was when I was a kid. Like, we listen to a lot of Beatles in this house.
Love the ball cap, so I had to ask.
Thanks. It is a cool hat, right?
Absolutely. Thanks so much.
Yeah, absolutely. Thank you. I look
forward to doing a presentation on Thursday to the Sharks.
Yeah, prepare them. It's ready for it.
Oh man, you have no excuses now. You shouldn't have revealed yourself.
Yeah,
Steven, we talked about this.
Yeah. Go ahead and dig into me on Thursday.
I'm teasing you. And I'm going to take one more question, and then I'm so sorry, guys. I got to run. I got a little boy who's got to go to Boy Scouts. So
no worries. Last one, Dalton. You ready?
Yeah. So this is actually Dustin. I'm with my partner Dalton. I'm sitting right next to him. So I'm Dustin. But Thank you for taking my question. So I was just wondering, I know that you said that you invest in several different types of deals.
Yeah.
For somebody like us who kind of new to this, we're doing mostly multifamily syndications.
Mm-hmm.
Do you, because we kind of made our own little presentation that we just like an overall of what it is that we're doing.
Yeah.
Do you have any of those, or do you have any example of those, or will you use the same strategies for
It's
those?
the same strategy.
Okay.
Okay, Dalton, tell me, for example, where are you located and where are you investing?
So we're both located in Reno, Nevada.
Okay. Is that where you're investing?
We started there, but we're actually investing in Texas markets and in Houston.
Okay. That's fine.
That's one of them. Yeah.
Okay. And then who do you have boots on the ground in Houston?
We have a couple of people. So we just got asked actually to help raise capital on this deal. We don't know, it's not like official, but we got asked to raise capital on this. So there are two people boots on ground that they're going to be kind of asset management, and they do underwriting and stuff like that.
Okay.
And then two others that are kind of closer to us.
And what's your team's value proposition up in Reno? Like, what is your value proposition?
So as far as what are we bringing
to the table? Yeah. I mean, obviously you're bringing money to the other sponsors, but like if I'm an investor,
yeah,
and I'm investing with you, what are you bringing to the table? And I'm not challenging you. I'm asking you to think about it. I'm really not challenging.
Yeah, I'm thinking about it.
Okay.
I mean, yeah, that's a good question. I don't really know how to answer that quite yet.
So I want you to really think about that. One of the steps that you have in the Rockstar Money Machine is that you want to think about what your value proposition is and what the members of your team and their value proposition is as well. Okay. And that's going to help you come up with your, what and hows a lot easier. If you can figure those things out, like going back to our example of our folks in Phoenix, Certainty. I mean, their value proposition is, I didn't go through the whole thing. I didn't really do that presentation justice, right? Or either of those presentations justice, because I was trying to show you the patterns. But their value proposition is, look, we can buy these properties for $50,000 less than market value. Building them ground up construction. And we have experience in construction and experience in doing this and experience in doing that. And we've already got the 3 projects underway. Give us money, right? So that's the basic premise, right? So you want to think about that. And then also you got it, again, guys, I can't emphasize this enough. You got to figure out who your avatar is. You said Dustin, right? Not Dalton.
Yeah, I'm
Dustin. So Dustin, who's your investor? Who's your investor avatar?
Yeah, that's something we're currently working on right now. We've kind of we're going through this program trying to figure out who our ideal avatar is. But I'm thinking for me, probably like doctors or dentists in the Reno area.
Are you a dentist or a doctor?
I am not.
Do you know somebody who's a dentist or a doctor?
I know a couple. Yeah.
Okay. All right. Like what's your relationship? What's you or your partner's relationship to the dentist or doctors in the Reno area? Anything?
Not much. No.
Okay. All right. Well, okay. So no, we got a hill to climb, right?
Yeah.
We got to get in front of them. We got to get them to know, like, and trust us, right? Do you guys have any? Dustin, this is not Shark Pool. I'm not trying to bag on you. I'm literally trying to help you figure this out. No, I really want to help you try to figure this out. So the first thing you got to do is start. If that's who your avatar is, or you believe your avatar can be, or who you can target, you got to start hanging out in those places and start figuring out who that person is, so you can start marketing towards them. I've done a bit of this with dentists and doctors in particular. Dentists, second to dentists is lawyers. Dentists have the highest suicide rate, right?
Yeah.
Like they are overwhelmed. Doctors, one of my partners is a doctor in one of my businesses, and he will straight out tell you that he was completely overwhelmed. And that, you know, he realized like he was going to live this life of just work. And and that is a lot of these doctors live in this like Shangri-La where they work. And they work. Sorry, I'm losing my train of thought all of a sudden. And then they can't figure out how to create passive income, how to make money in their sleep. Doctors, you barely get any sleep, but for that sleep that you are getting, I'm going to teach you how to make money in it. And that is the angle that you need to go about, and then become that guy. Okay. So you got to work on breaking into that market, understanding that avatar before you do anything else. Okay. Do you find that helpful?
Yeah. Thank you.
I'm coming, buddy. I'm coming. All right, everybody. Thank you so much.
Thank you all. Thank you, Jillian.
All right. I'll talk to you guys soon. Have a great night.
Outstanding.
Bye.
Thank you all. That was great, right? It was great. Y'all like it?
Yes, that was amazing. Thank you.
That was an amazing presentation.
I loved it.
Yes.
Yes, I'm ready for the recording.
Let's watch the recording.
Can't wait till Thursday.
Yeah. So for you all, so that is great. For you all who don't know, we do have the Shark Pool every Thursday night. It's gonna be every week this year. We're trying to help people raise capital and fund more deals. We have a goal to set that we're after it, and we're working on other stuff to help funding on the back end as well. So if you have a deal and you want to present a Shark Pool, feel free to email me, Jana, or our Irish Kevin. I think that the chat is in there. I'll put my information in the chat in case you don't know my information. So Shark, make sure I spell it right. Shark Pool.
But I need to talk to that girl from Nebraska.
We gotta meet up, Vish. I'll tell you all about Memphis, Nebraska.
Let me know, because we're looking to fund more deals and trying to get deals funded. That's what we're trying to do. Feel free to reach out to me. I look forward to seeing you all Thursday. Reach out to me and let's do it, okay? Have a great night. That's it. The recordings will be. Hold on, wait.
Bye, guys. Bye.
Thank you. Bye.
Thank you. Bye-bye.